afternoon, everybody. How's everybody doing? All right, very enthused crowd here. My name is Pat Ma. I'm the Senior Product Marketing Manager for HazardHub, so thank you for coming to this afternoon session. So for this session, you're going to get an overview of HazardHub, see a live product demo, and hear about what's in store for HazardHub. We want to make this session as interactive as possible, so if you have any questions about anything that you see here, please ask questions anytime through the Connections mobile app, or wait until the end of this session and you can ask your question live. Also, we want your feedback at the end of this session, so please submit your feedback about the session through the Connections mobile app at the end of this session. So with that, now I'd like to introduce Bob Frady, co-founder and VP of HazardHub at Guidewire, to tell you about HazardHub. Bob?
Thank you, Pat. Hi, everybody. My name is Bob, and I'm a data alcoholic. I am the co-founder of HazardHub. We were purchased by Guidewire a year ago, still the newest member of the Guidewire family. We specialize in data for insurance companies to write policies. Now, the session is titled Data for Better Underwriting Decisions. I'm making a big assumption that you actually want to make a better underwriting decision. That's why you're in this room. If not, that's okay. You can go if you want to. This is me. I need a new headshot. Yes, I do. There's a safe harbor statement that we could spend the entire time reading, but we're not going to. But basically it says we're going to talk about a lot of things. Some of them are future things, and some of them, the timing may be different than what actually we talk about. But this is the safe harbor statement, and you can read this at your own leisure, or if you're having trouble falling asleep. Here's our agenda. Who are we? What do we do? How does it work? What do the results look like? Going to cover something different than we've covered before, which is what's new since we've been part of Guidewire. Cover use cases, and then if we have time, we'll do a live product demo. Who are we and what do we do? We tell you the bad stuff that can happen to a property. If there was a test, this is the question I would put on here. What does HazardHub do? They tell you all the bad stuff that can happen to a property. Whether it's wind, hail, tornado, lightning, wildfire, flood, storm surge, we cover them all. Risk is changing in a good way. Now, this is not a discussion about climate change. This is a discussion about data. What's happened over the last 5 years especially is data has gotten much, much better. A lot of the trouble that customers have with data is data fidelity. It's good, but it's not good enough. But technology has advanced so rapidly over the last 5 years that the ability to pinpoint risk onto a property is much greater than it's ever been. So yes, the world has its risk challenges, but the data to combat those challenges is getting better and better every day. We like to think that we're on the leading edge of property risk identification. It's what we do every day. We have a team of people who finds out where fire hydrants are because it's important to know where they are. 1,400 data elements. When we first started, it was 100. It's now 1,400 data elements in one API call delivered in less than 2 seconds. Earth, Wind, Fire, and yes, Earth, Wind, and Fire is our favorite band. And September 23rd is actually HazardHub Day as well as Earth, Wind, and Fire Day. Water, man-made property characteristics, permit data. We now have 137 million permits in our repository versus 75 million that we had a year ago. And now increasingly casualty attributes for commercial lines insurance. One of the great things about HazardHub is if you are a Policy Center customer, the data's already in there. All you have to do is drop it in the API key and you're live. 1,400 factors in under 2 seconds. We give you the best risks and the worst risks for a particular location. If you build models, you can use this data to build better models. Now, one of the traps that we'll see is people will say, well, I want to add your data to my existing model. That's like putting good gasoline on top of not so good gasoline. You got to do champion challenger and set them up against each other, not in combination with each other, to get the best results. The easiest way to understand this is to show you. This is a location in San Diego, California, Escondido, California, for those of you who know the area. It is 637 Hibiscus Glen. The only thing we've had to do in order to get all of this data is to enter the address. We don't have to ask the client anything. We know that the nearest fire station is 1.1 miles away. We know it's at Escondido Station 4. We know it's a full-time station. It's in the Escondido Fire Protection Zone. We know that there are 8 stations within 5 miles. But more importantly, we know that there's only one within 6 minutes of this location. Because we measure not only straight line distance, we measure road network distance, and we measure travel time distance. Because distance doesn't matter. Time is what matters. We know that there's a hydrant less than 250 feet away. There's 17 hydrants within 1,000 feet. It's a very well hydranted area. AAIS, if you use their fire protection score, would say that this is a P2, which we deliver through the API. Our Property Fire Score Plus, PFS Plus, would say this is a 738 on a scale of 1,000, which is a B. And we'll explain why later. But the relativity for this location is 1.04. This property has a 4% greater fire risk than an average property. We know that the property elevation is 400 feet. The distance to the coast is 13.4 miles. For those of you in the southeast, you know that nobody can give you or agree on the distance to the actual coast. So we give you 3 versions. We always tell you to choose the closest. But some people want to use the distance to the beach. Some people want to use the distance to surgical water. We give you 3 answers so you can make your own selection. And we know it's a rooftop geocode, which surprisingly doesn't happen all the time. A lot of times you'll get a submission from a broker and you automate the process of running this data. You don't know if that's a good quality address or not. We'll report back to you and say, this is not necessarily the best quality address. So that might kick to a manual process because you want to make sure you get that address correct. So those are the basic pieces of information that we tell you about a property. The second is we tell you what the risks are. Now, we have a whole laundry list of different risks, but these are some of the bigger risks for this location. It's a D in our wildfire model because it's actually been inside of a wildfire perimeter before in 2007. It's got 958 feet to fuel that can support a wildfire, and it's in a Santa Ana katabatic wind zones, which are downslope winds from mountains. A lot of the science behind wildfire models says that wildfire burns uphill and that properties at the bottom of the hill are safe. And we're here to tell you that in katabatic wind zones, the wind blows the other way and takes out houses very unexpectedly. It's California, so there's some earthquake risk there. It's not as bad as some other areas. The MMI is a 7. You'll get a strong shake with an average Richter scale between 4.6 and 5.2. Yes, there will always be outlier cases. But this is what the science tells us about the expected value for this location. So wildfire and earthquake are the 2 big risks for this location. We also tell you what it's not. This location is not a risk for flood. Now, I know that if you're a personal lines writer, you don't cover flood. Great. For commercial lines writers, it's a little bit more important. But it's really to just demonstrate a point. We know that this location is 6,100 feet from the nearest river. It's 2,300 feet from the nearest lake. It's 1,600 feet from the nearest floodplain, 100-year floodplain, and it's 68 feet above that floodplain. So if you're concerned about flood, this is not a property that you need to be concerned about for flood. If this flooded, we'd all need to get an ARC. This is what we can tell you about the property. We use a combination of assessor data and MLS data. I recently bought a home. My insurance company thinks it's 900 square feet smaller than it actually is, which is good from a premium standpoint, not so good if you're writing the property. And the reason is because they use assessor data rather than MLS data. We give you a combination of both so you can ascertain the actual size of the property wherever possible. This property, surprisingly, is a condo. It's in an association. It doesn't have a common wall, but it is a condo. 2-car garage, 2 bathrooms, 4 bedrooms, updated by the MLS, built in '83, 2,100 square feet. It's got stucco, it's got a tile roof, great from a wildfire resistant standpoint. It's got a cooling system, it's got a fireplace, it's forced hot air, natural gas, it's 2 stories, it has an association fee, so you know there's some upkeep. but I wanted to point out the last three. In 2018, this property sold for $605,000. This year, it's worth between $883,000 and $1.1 million if you put this on the market today. The replacement cost is now greater than the cost that they use to buy the property. If you have a Schedule A that doesn't adjust, you may be subjected to a lawsuit for intentional underinsurance. If you have replacement costs guaranteed on your Schedule A, then you may be looking at a liability you weren't expecting because you're not keeping up with the value of the property. We give you the last sale price, we give you the current market value, and we can also give you the replacement cost. HazardHub is an API. For the best way I can explain an API, it's like a gas station. You drive up, we dump in the data, you drive off. Because it's an API, you can put it in many different places. You can use the API by itself. So for those of you who want to use this somewhere that can accept an API, we can direct it into the system, or we have a self-service portal where you can just type in an address and see the data. It's built into Policy Center already. All you need is an API key, and it'll turn on. It's now inside of Insurance Now, which we launched with part of Flane, still figuring out the right pronunciation. For agents, we have a portal called Agent Risk View. A lot of agents need to answer these questions in order to fill out forms, an accord form or something that they're using to submit, and they can't get it from the carrier. So they'll come to us to pull in where's the nearest fire station, where's the nearest fire hydrant. And then free home risk, which we built way back when for consumers so that consumers could know their risk. If you want to right now, go to freehomerisk.com and put in your address. We'll ask you for an email. We'll send you a report, but we won't do anything with the email. You can use your in-laws address if you feel uncomfortable. But that's what we call the N of 1. Does this make sense for the property that I know so well? If it doesn't, then we'll probably never talk. But if it does, it'll give you some level of, well, these guys know what they're talking about. If you want, you can go to the API at api.hazardhub.com and sign up for free. Use your work address. If you put a Gmail address in, we'll reject you. But we want you to know, we want you to feel like you made the decision to get the data because you believe in it, not because we believe in it. All of this data stuff is great, but it doesn't matter a hill of beans if it doesn't work. We had a customer who did a study of AALs, because we don't provide AALs, they come from CAT models, but they did the work to apply the AAL to our wildfire model. And with our wildfires, with our models, we generally give you a grade, A through F. For our European friends, there's no E, H, or I. A through F, but we also give you a score underneath it, which is much more granular than the grades. The scores all roll up to the grades. What they did is put custom groupings of these grades together and found that the difference in AAL between the highest and lowest segment was a factor of 100. The closest they could get with their market-leading system was a factor of 4. This gives you a lot of pricing ability to safely write policies that might be difficult for other people to write successfully. This is another customer study for hail. Hail is a fairly vexing problem. The first line is the overall loss ratio, and A's are 100 times less risky than F's. A's are 72 times less risky than D's. But what's interesting is that second line. When a hailstorm happens, except for in A areas, the damage tends to be fairly flat. If hail's coming through your roof, it's coming through your roof regardless of the zone. So we do see that in the F zones, it is a little bit higher severity, but it's not dramatically higher. What's dramatically higher is the frequency, because hail is repetitive. It wears the roof down over time until finally you have a claim. Now, some people, like our Wisconsin team, will joke, well, that's how we get new roofs in Wisconsin. We just wait for the hail to come. But this is something that you may want to know before you establish the price for that location. The question that we get from a lot of people is, now that you've been purchased by Guidewire, a company we all love and are very happy with. What's new? For those of you who may have known HazardHub before Guidewire, we're data crazy men. We love data. We put data together, we build models, we do a lot of things because we think that they're cool. The thing that we lacked as HazardHub was insurance industry expertise. We've worked with insurance companies for 20 years, but never worked at insurance companies. And also, we didn't have a big workbench when it came to actuarial talent. Well, Guidewire solved both of those problems for us. We brought over a product person who worked at Farmers and the California Fair Plan. We brought over an actuary who's built lots of models before. We decided, let's take a look at building even better models than what we have now. Our first effort is called Property Fire Score Plus. Here's what you read in the paper. My fire department went from a 5 to a 4. Your insurance rates may go down. And then they don't. We've looked at hundreds of filings. 1 through 6 are fairly flat. Yeah, you do see some credits sometimes for 1 or 2s. And then 7, 8, and 9 are in a world of their own. We think that there's better ways to look at things. We built a GLM. Now, the actuary can come out and tell you what it is. I'm not going to pretend that I know, except we built this because this is what actuaries use. We want to be able to price every property. And we want to be able to delineate that price better. Because if you're in a zone right next to the fire station, logically you would think your loss experience would be better than if you were 10 minutes away from that same station. Here's how it works. As we said before, people focus on miles. Miles aren't the problem. Distance is the problem. Road networks are the problem. Speed matters. Anecdotally, if my computer, well, actually, if the piece of paper caught on fire right here, I could put it out with a glass of water in a couple of seconds, unless it was a grease fire, which would be a bad idea. Speed matters, and it matters in house fires as well, property fires, excuse me. The sooner you can suppress, the less damage that you're likely to have. So we went through hundreds and hundreds and hundreds of different combinations of variables. And we found 4 categories of variables that led some level of power to the model. The first is drive time. The faster you can get there, the better. The second is the distance to water. We have a database of over 11.5 million hydrant locations in the US. We have a team of 7 people who do nothing all day but look for fire hydrants because it's that important to protection. The third is staffing, volunteer versus blended versus full-time stations. And then finally, the number of stations. This all came up because one day I was in Flint, Michigan, and the hotel caught on fire. Well, there was an alarm. 3 different stations showed up. 3 different departments showed up. And I'm like, I thought that wasn't supposed to happen. Only one showed up. It's like, no. Multiple people show up if there's a fire. Here's what it looks like in terms of the losses. And we took multiple cuts of this data at multiple drive times to arrive at our conclusion. Listen, it takes 2 minutes for people to put their boots on and get on a truck and get going out of a station, even if it's fully staffed. Every minute of drive time is critical. In 3 minutes, you can fully envelop a building or a room. What we see is that at 4 minutes, 4 to 6 minutes, 6 to 9 minutes, 9 to 11, and then up to 50 minutes to travel to a location, what the loss curves are. And the ratio, the yellow line is the one to pay attention to. The closer you are, the lower the experience. The second is distance to water. If you're within 250 feet of a hydrant, which most people luckily are, you have the lowest loss experience. If you don't have any hydrants, but you have perennial water, it's better than having no hydrants and no perennial water. And the red line is the one to pay attention to here. The primary source of water for a fire is the fire truck. Most trucks will carry between 250 and 500 gallons of water on the truck. They have to be replenished. So for a small fire, like a car engine fire, they can put it out with the water they have on the tank. How do you refuel that when it's a more consuming fire? So hydrant distance is critical. And then if there's no hydrant, dip it into a pond or a source of perennial water that they can draft from to put out a fire. Now, fire hoses tend to come in 50-foot lengths, so if you have to go 1,500 feet, you either daisy chain the trucks together or you build a big set of connections, all of which takes time. And finally, station density. 3 stations, 2 stations, and 1 station within 6 minutes of a location, or no stations. The yellow line is the one to pay attention to, again, here. Sometimes that closest station is busy. You may live right next to the fire station, but if they're out putting out a car fire and there's a call, it's going to take time to get back there. So having surrounding stations is critically important to making sure that fire gets put out as quickly as possible. And then finally, volunteer fire stations. Full-time and blended, or blended is part full-time, part volunteer, and volunteer is full volunteer stations. Volunteer stations get a bad rap. It's critical to at least protecting the community where you can. Now, it may not be able to save the property, but it may save adjoining structures. And we see that volunteer stations do lend some level of risk to coverage. This is what the model performs like. For every one of a combination of those variables, and sorry for the eye chart, there's a relativity associated with it. So if you've got 3 full-time stations within 6 minutes and 250 feet from a hydrant, your relativity is 0.931. Versus on the other end, if you have no stations within 6 minutes, even if you have hydrants, the best you're going to score is 1.529. We can provide all of these relativities as part of the API. This also gives you the ability to price any location, because we can measure the distance to the nearest fire station. Even if it's an hour away, we can still measure the distance and provide a relativity for you. You may choose not to write it, but at least you have the ability to better target that location. Here's why we did it. 2 different districts, Rancho Cucamonga, California, is a 2 in some other coding systems. And there are some, 28% of that are actually better than that, which gives you the ability to price slightly better if you want to capture that business, you want to grow in that market. And about 8% of it is worse than that. Those may be the 8% of risk that you may not want to write, or you may want to charge more for. Versus someplace like Napa, which is all over the board. If you've ever been to Napa, there's a downtown, there's woods, there's trees, there's fire, it's crazy up there. This gives you much more ability to accurately price the location without having to ask the customer or the agent, are there any fire hydrants near you? It's automatically delivered. And this is the same thing in reverse. Now, listen, in Rancho Cucamonga, you still got 80+% of the population are within those first 2 good segments, but that leaves you room for pricing, either to shed people off the book or to attract new customers. You may want to price more aggressively in the best segment for the fire portion of your policy, versus Napa is very spread out. How do customers use our data is the other question I get. How do I get started with this? And the answer is it depends upon the customer. We have some customers who are in comparative raters, and they're like, there's certain risks I just don't want to touch. If it's a wildfire F, I don't even want to put a bid up there. Or if I have to give a bid, I make it go really slow so it appears last, and people don't pick it because it's last. So lead scoring is because you never know what you're going to get in terms of a lead. What are the risks that are associated with that lead? So you could effectively score it almost instantaneously. The second is pre-fill. A lot of pre-fill, people think about property characteristics, which are true. We give you 2 different sources. Again, the assessor data and the MLS data, where it's available. We've got 96% coverage on both of those. But also, what are the risks? When I bought my home in Minnesota, I'm an F zone for hail. I was right next to a creek. I have flood risk, and I have radon risk at that location. Did my insurance agent bring any of those up? No. She talked about what the price was, which was fine. I understand. That's the way it works. But as the underwriter, I might want to know those things. Now, my carrier successfully raised my rate by 20%, even though nothing in the house changed. But, that's a whole nother story for a whole nother day. Maybe it was because of risk selection. Like, wait a second, we got into this thing, and it's a little bit riskier than I thought, so let's raise the price. But what we really want to get at, we want to get away from things like zip code level data analysis. Zip codes are meant to deliver the mail. How many of you think, boy, I want to emulate my business after the Postal Service? Yet that's what we do in insurance all the time because it's easy. When you turn off a zip code, you turn off opportunity. We want to be able to rate every property for the risk associated with that specific property. And then finally, retention. Let's say you underprice something like my property in Minnesota and you decide, I don't want this, so let's raise the price of maybe the customer will leave. Or I'm going to non-renew. In California, you can non-renew up to 10% of your book without running afoul of the Department of Insurance. I'm not sure what it's like in every state, but if you want to depopulate, who do you depopulate first? We have more than 170 customers. It pops a lot of times into their policy admin systems. And the best way to learn about it is to hear directly from the customer, which hopefully, here we go. It's from our customer.
We are a personal lines homeowners provider here in the Southeast. We make sure that you can actually have a quote that a consumer can bind based on the coverages they select in about a minute. For us in the homeowner space, a lot of the challenge is making sure you have good data, appropriate data, and data that you can trust.
Everything at Orion 180 is built on ease of use and speed of issuance of the homeowner's policy. Without Guidewire HazardHub's speed of accurate data, that's not possible. When we enter in that address at the beginning of the quote, we instantly pull HazardHub results and apply all of those characteristics throughout the quote. Geolocation, roof age, roof covering, year built, number of floors.
HazardHub has helped us efficiently grow through speed, price, and process. There's so much data that is sent back to us. What's the likelihood of a hurricane? What's your chances? What's your risk? What's your wind factor? How many major hurricanes have landed in this area over the last decade?
The HazardHub scoring system is very valuable. It's a tool we've used in the underwriting process. There could be a tree overhang on a certain property. With a fire score of an A, it's not an issue for us. But maybe with a fire score of an F, it's a larger impact on whether we actually keep the policy or not. Guidewire HazardHub has helped us grow by providing scalable and accurate data service.
For those of you who might want to talk to Ryan, he's in the next session with me. So he'll be here talking about how he uses HazardHub. We're really just getting started. The ability to target at the house or the property level is new and gives a lot of people the willies. They're like, wait a second, what do you mean I can't use zip code data? You shouldn't. It's not a good measurement. But nobody's giving you the tools to work more efficiently at a price that isn't going to break you. That's what we do. That's what we specialize in. We're unfortunately obsessed about it. So let me take a quick look at our API. And I'll show you how it works. This is our API screen. If you sign up for the API, you'll see something similar to this. Because I'm an admin, I have a couple of more screens. But it tells you, here's a single address lookup tool. You just start to type in an address. All the documents are there. And you can see every query that you've made. We don't store any of the data that gets returned. It's all generated dynamically, but we do store the query itself. Because we want you to be able to go back and say, did I actually run this property through HazardHub and how did it turn out? So if I go back in and pick a property that I've already looked at in this case, This is how it comes back. The first thing that you see is the address match. This is an actual street address, so we're right on top of the property with this location. It's Minnesota, so Minneapolis luckily doesn't have a lot of wildfire risk. Some northern areas do. But all of our data is in 3 layers. The first is the grade, which you can see right there as an A. The second is the score, which in this case is the composite, which is a 7, which is as low as it goes. It goes 7 through 50 is the range on wildfire. And then we give you all of the components that were used to build that model. Because some people want to build their own model. I'm like, great, have at it. You might have to struggle with getting it admitted, but you can build your own model if you want to. One of the nice things in the most recent release of our API was we have an on-the-fly WUI calculator. So we tell you what sort of area this is. In this case, it's not in the interface, and it's developed, low-intensity development for this area. A lot of people don't use that in underwriting, but it's there if you wanted to know. A lot of people don't use a lot of these elements in underwriting because there's 1,400 of them, and people get tired after the first 700. Drought frequency. We can tell you that this location is in moderate drought right now. Can't underwrite on it, but it may be something that you want to inform your consumer about. Then we go down to wind regions. It's not in a special wind region. Maximum wind recorded at this location is 64 miles an hour. It is a P2, which is AAIS. It's in a municipality. It's in Edina, Minnesota, next to Minnehaha Creek, less than 1,000 feet away. It's an urbanized area, a census block. Now, I'm telling you all this because at some point you have to do reporting. You got to roll all this stuff up so you can actually have this appended onto your file on the fly. So when it comes time for reporting, all of the census geographies and all the zip code data is already built into the system, so you can just do a simple roll-up. We have a hydrant here. It's right across the street from my house because I'm not buying a house with a hydrant right across the street. We have 20 hydrants within 250 feet. It's 1.73 miles and a 5-minute drive from the fire station. It's a full-time fire station. There are 59 stations within 10 miles and 17 within 5 miles. There's a lot of fire stations around. Minneapolis Fire Station 20 is the nearest one. The second station is 7 minutes away. The third station is 8 minutes away. It's not subjected to earthquake. It's not in the USGS eastern zone. It's not subjected to soil shear, mudslide, or lava flow. We put all of these on there. Sometimes you don't have tsunami in Minnesota. There's no shore. But we're not going to blank it out. Now, we can not return it to you, but a lot of times we'll show null data because it's just not relevant for that location. And there are no hurricanes. Hurricanes only happen within 100 miles of the Atlantic coast, and Minnesota's a bit further away. It is 4,700 feet from a Superfund site. There are no PFAs around. There's no brownfields around. The nearest sinkhole is 2.2 miles away. There is some sinkhole activity in this area. You do have a somewhat elevated risk. It's average. It's shale rock under 50 feet from the surface of the location. And the nearest known one is 2.2 miles away. We do have wind risk here, fairly significant wind risk. And we give you a percentage, 19% annualized wind risk for this location. So you're going to have a damaging wind event 19% of the time at this location, so once every 5 years. Compare that to flood, where it's really panicky if it's once every 100 years. Now, the damage may be smaller, but for everyone who lived through the Dretcherow, then you know it could be larger. And we also give you the parameters for the rings, how many within a mile, 2 miles, 3, 4, and 5 miles. Very high risk of hail at this location. 26% annual risk of hail at this location, which is probably where my premium went up. I have a new roof, but still, it's high risk. Relatively moderate risk of tornadoes. There's not enough juice in the atmosphere, but it can happen there. Relatively moderate risk of lightning, and we measure lightning ground strikes. Annualized risk of 1.6%. We've seen this as high as 12% in some areas of the country, usually in the South Coast. For those of you who are right in Texas, it's usually on the eastern part of the state. One of the reasons why there's a lot of delays in Dallas is because the annualized risk of lightning at the airport is 9%. We give you tons and tons of weather data for you to build your own classifications. We tell you the hardiness zone, whether there's a possibility of mold. Ice dam's very high. Actually, when I bought this house, I said, have you had an ice dam? And they had to disclose to me that they actually had. They weren't otherwise going to disclose it. Only because I knew this did they actually disclose it. And it's also got very high risk of frozen pipes. Water shutoff systems are a good idea for this location. Relatively high risk from snow load, which is the snow weighs a lot in that area. If it sits on the roof long enough, you do run the risk of roof collapse, especially if you have an older roof. It has a high risk of flood, according to our flood models, which are non-politicized. We kind of say, well, what if FEMA didn't exist? What would we say? This property has a very high risk of flood. The basement actually did flood several years ago, but we bought it anyway. FEMA says it's not a flood zone, flood risk. You know, in Ian, 50% of the properties that we showed as subjected to storm surge were not in dangerous areas according to FEMA. They were in X zones according to FEMA. So we try to give you multiple looks at the data for you to make the best decision. And one more thing I want you, lots and lots of flood data. We call this flood holla for commercial lines writers especially, lomas and lomers, whether the customer or the builder has applied for one of those. And then the number of FEMA claims, and you can see 2014 there were a couple of claims in the census tract because that's the lowest that FEMA reports at. Slope, elevation, aspect, all those good things is in a wind pool, windborne debris zones for Florida. We give you the 2001, 2007, 2010, and 2014 scores as well as the current year score. Is it subjected to storm surge? I sure hope not, since there's no coastline there. It's not subjected to sea level rise. And then what are the crimes in this area? Generally a very safe area overall. And there's some airport noise because we are in the flight path for MSN. One of the interesting things, if you have to calculate a premium tax, we have premium tax calculators. We're actually certified in Kentucky as well. And we give it for all the other states. Florida is the other gnarly one when it comes to calculation. Most are pretty straightforward. Then we'll get down to underground storage tanks. I read an article about a couple in Massachusetts who had an oil tank, and it broke and flooded their basement with oil. And in Massachusetts, you have to remediate 10 feet down into the soil, which means you have to destroy the foundation and rebuild the house, essentially. It's a $250,000 fix on a house that cost $300,000. No one thought to ask, do you have oil heat? In an oil heater, even though it was inspected, there was a $10 rider that they could have purchased per month. Now, the insurance company stepped up and paid the claim. They didn't have to, but they did because it got a lot of bad press in the newspaper. But now we tell you, where's the nearest underground storage tank, and is it a residential storage tank, and has it been leaking? So whether you're writing commercial lines or personal lines, this residential tank indicator will give you an idea, hey, we see that there's a storage tank here, can you tell me more about it? Maybe we want to auto-enroll you in that rider for underground tanks. Number of tanks within a quarter-mile radius, half-mile, and 1 mile radius, which surprisingly is associated with a number of other risks. So rather than go all the way through the risks, in the interest of time, we can tell you that here's the property data. It's a single-family residence. A lot of times people will use this to say, is this a mobile home park? About 75% of the time we can tell you whether it is, and that automatically gets referred somewhere else. Or is it manufactured housing? So we'll tell you what the standardized use code of the parcel is. This is the assessor data. Last assessed in 2021, 3,800 square feet. It's got a fireplace. It's got an attached garage. It's got heaters. When the last sale price was, what the size of the lot is. All sorts of fun. 6 baths, 5 bedrooms. Yep, that's my wife and I. And the tax amount for this location. What's interesting is if you go right down here to the MLS data, and let's see if I can find it. property size is actually 4,883 square feet. So I was wrong, it's 1,000 square feet. This property is 1,000 square feet bigger than the insurance company thinks it is because they use bad pre-fill data that only used assessor data. You always want to use both. Okay. Oh, by the way, sorry, I didn't mean to do this. That was accidental. But this is damaged properties from Hurricane Ian in the Fort Myers area. Whether or not you write this area, you may know someone who does. 95% of those damaged properties had one thing in common across the state, besides the fact that they were all in Florida. They were all in storm surge zones. A piece of information that's readily available through the API. What do you do with that data? Raise the deductible, create a wind exclusion, whatever it happens to be, you decide what to do. But 95% of these damaged properties were in areas that we knew were dangerous. And we want you to know that they're dangerous as well. And with that, we can flip it over to any questions we might have.
All right, so let's do Q&A now. So
Yep.
We got one question from the app, and then we probably have time for one or two questions from the audience. So a question from the app. If I'm already using data from a provider like CoreLogic or Verisk, why should I switch to HazardHub? What differentiates HazardHub against other offerings in the market?
I would say a couple of things. If you like your current data provider, you should marry them. You know, don't waste any time doing an analysis if you're happy with the results. You know, there's a pain of change that's associated with using data, with changing data. If you want more accurate data that's updated all the time, you know, we monitor fire stations every single day, and every 2 months update the file. We monitor hydrants every day, and every 2 months update the file. If that's what you want, if you think that would give you a difference, then come and talk to us. You know, if your system has been unexpectedly down for a week and no one told you about it, then come and talk to us. Our system hasn't been down since we put it up, except for 3 hours, and we know the reason why. So I would say if you're happy with them, stick with them. If you think you can do better, or you want to see if you can do better, then talk to us.
All right, great. Probably time for one or two more questions. Let me run back here with Mike.
So we have an external rate model. How would we be able to either use the data or use the relativities to either integrate or supplement that model?
That is always a challenging problem. Guidewire is building connectors to rating engines, so you can do that more efficiently on your side, but there is some work involved. You know, this pain of change is not nothing. There is some level of work involved in that change. Now, that said, I think that Guidewire is building a path to do that more effectively in a more integrated fashion, but for right now, it still is a process where you have to put in the new data into the rating engine.
All right, any other questions?
And trust me, there's a million reasons to say no. And if your loss ratio is 95 or better, then you're probably getting your bonus and you're good. If your loss ratio is creeping up on 100, you need to look at this stuff. It behooves your business. You're not going to be able to live off investment dollars forever. That's when you should call us.
All right.
Do you have plans to go to a building level for multiple buildings on a property or parcel?
We do tell you if it's available from the assessor how many buildings are on the parcel. We don't have individual square footages for those buildings. Some of our partners, like BetterView, will take a satellite image and then tell you what the different structures that are on. For example, outbuildings are a real problem. You know, you've got the main structure, but then you've got 4 or 5 outbuildings around it that aren't reflected anywhere. And that becomes a little more problematic. So I think the answer is we provide it where we can currently, but there's always room for improvement.
Look, it looks like you primarily cover the U.S. Any plans to expand to Canada?
Yes, this is part of our safe harbor, okay? Don't hold me to this promise, but as part of Garmisch, we are planning to launch Canada. It will not be as comprehensive as the U.S. because the data sources in Canada are different. We do expect to distance to the coast, fire stations, fire hydrants, fire, PFS plus, flood, hail. So we look at the claims that are concerning to Canada, and we're building out based upon how well we can answer those questions. So yes, we'll know in January what the final lineup of variables is, and we should be good to go for Garmisch. Europe. Europe's a little more challenging because the countries are even tighter with the release of data. I think the first step that we'll take there is we're working on a global wildfire model. So we'll probably start with that first and then work back to more localized risks after that. Listen, run your free home risk, run your address. You get up to 3 for free. Nobody will send you anything except the report. Don't worry, you can put it in there. It's the single best way for you to see, does this reflect what I know about a property? And thank you very much.
Okay, thank you, everybody.